Hey everybody, this is Ryan Mallory, and look, I know you guys are probably scared, you're nervous, you're looking at your 401ks, your 403bs, your IRAs, and you're saying to yourself, I can't take this anymore. I'm seeing the gains from last year quickly melt away. I'm looking at the gains since 2009 start getting eaten into. I get it, man. The stock market's making everybody nervous and a little bit scared, but I'm here to provide a little bit of clarity, a little bit of direction, and hopefully some understanding of what the market's doing, what you can do going forward, and how you should approach the market. First off, let's take a look at the S&P 500 because this is where the meltdown's happening. It's happening in the other indices too, but I like to follow the S&P 500 because it represents the 500 largest stocks in the stock market. The S&P here had this key price level, okay, going back to June of last year. It had held for the most part until last week. It broke, but then we recaptured it. Early this week, we had this huge chop. Down, up, down, up, down. And now today we're having the follow through. It's the first time we've seen follow through in either direction with this the past week here. Today is the first day of it. In fact, coming into the day, the stock market was actually up on the week. But now, with another 112 point sell-off that we're currently seeing, it's putting it right back to the red and towards the lows from last week. Here's the key support level you need to be watching. You have a support level going back to August of last year. It's trying to hold this price level for whatever reason. It held it last week and it rallied a good bit, okay? Now we're getting ready to retest it again. If it breaks below it, and particularly if it breaks below the 28th of February lows, you're gonna have some much bigger selling that's gonna take place here, or at least that's what I think. Now where does it go? If it breaks below that support level, I want you to take a look at this purple trend line here, going all the way back to 2016. It has held well. It provided support during the 2018 quarter four sell-off. And if this doesn't hold, first of all, you don't even want to test this level, okay? You want to see a rebound before we ever get here. But this is the major level for the market. It's about 12% lower from where the current price is at right now. And yes, it would mean a lot more bleeding in your portfolio, but this is a key support level here. So why is this all happening? You have a lot of things going on right now. First of all, you have the coronavirus. We all know about it by now. I don't have to get into what that is. It's basically killing the markets. It's killing travel. You take a look at RCL. This is Royal Caribbean. Look at this. From 135 all the way down to 63. It's lost over 50% of its value in the past month. That's a big deal. You take a look at American Airlines, another stock. It was trading at 31 not too long ago. It's trading at 15 now. More than a 50% drop just in the last couple weeks alone for American Airlines. Now, is all the airlines doing that? No. Delta Airlines, yes, it's taken a hit, but it's not taking the kind of hit that American Airlines is. It's losing about 25 to 30%. Still a huge number, though. Now, in the process, you have oil. Oil feeds these things. Oil depends on tourism and travel because the more people travel, the more oil that's being used. Huge sell-off today, over 10%. Yes, oil is crashing today. It'll be nice for you at the gas pump, but it's not good for the economy. We are literally looking at a possible retest of the lows from 2016. And that could very well happen in the next week or two if this thing does not bounce. But it's not just oil. Take a look at the 10-year treasury. It's going below 0.7%. That's not a good thing. Why is that? Because it kills the financials. Why did the Fed cut rates a 0.5%? They should never have done that. That's why we're in this mess this week. We probably would have been rallying, but the Fed cut the rates thinking they were helping it. Jerome Powell goes up on stage and acts like he's the hero, and the market tanks ever since. That was not a good thing. Cutting interest rates in emergency by 0.5% was not a good thing. For one, the Fed is losing all of its ammunition. It has nothing to play with. This didn't even help. This actually hurt the markets, not help the markets, hurt the markets. Personally, if it were me, I think Jerome Powell should step down. I think he's incompetent. He doesn't even belong in that position. Because when the yields go down, the price of bonds goes shooting through the sky. Look at this. This is parabolic here. This is crazy town on the 20-year treasury bonds, okay? This is an ETF, TLT. I've never seen a move like this since 2008. Think I'm wrong? Look at 2008 here. We will go right back to 2008. Look at this. That's what 2008 looked like when the market was in a free fall. Now look at what it's doing here. Same exact thing. This is a panic move here. People are getting out of stocks. They're going into bonds. But back to the 10-year. Unless this thing picks up, the financials are not going anywhere. This is the sector for the financials. Look at this thing. It is in free fall over the last 2 weeks. Look at the daily chart. In a free fall. Lots of volume right here, okay? You see that? That's tons of volume. People are panic selling here. It's breaking key support. I mean, that's a massive support level just broken there. Good chance it's possibly going to even break the lows from March of last year as well. Where does it go? Does it go all the way back down to the December lows? I'm not sure, but this is getting really bad. Let's check out the VIX index here, okay? The volatility, it measures the fear that's in the market. When the stocks start to go lower, the VIX starts to go higher. If it gets over 20, that's considered pretty serious. Right now, we're seeing readings at 49. 5 minutes before I even did this video, it was hitting 54. That's crazy town, okay? Now, let's go back further. Have we seen any kind of readings like this before? No, not in a long, long time. 2018. We saw the massive sell-off in February. Did not get this high. Let's see what it did back in 2015. Did it get this high? It got up to 53. We beat that today. So this is a major thing. We haven't seen this kind of a move in ages. Look at this. Volatility did not get this big. 2008, the highs from 2008. Yes, we're not anywhere near that level, but it was 89.53. We have a long ways to go before we get there. But look at this, and this is the monthly chart. You can see what we're dealing with on a grand scale. We have not gotten to the 2008 levels yet, but we have beaten everything already since then. This is where it's getting really bad really fast. Now, let's look at the S&P 500. I'm going to pull up the 30-minute chart here because there's been some interesting patterns over the last couple days happening. You can see here, yesterday we dipped way down and then we came right back up for about an hour and a half and spent the rest of the day selling off. What happened today? Same thing. We went way down, spent the next hour rallying. Looks like we're going to go right back into the green on the day, and then it just sells off the rest of the day. That's becoming a big problem for the market here. What's happening is that the short sellers, and if you don't know what shorting a stock is or shorting the market, it's basically when you borrow shares from your broker, you take them and you sell them on the open market, hoping that they go down further so that you can buy them back at a lower price and keep the price difference. So if you shorted Apple at 300, you borrowed the shares from your broker, you sold them on the open market, you collected $300, but you got to give them back to your broker. You got to pay back your broker with the shares. So the stock goes down. Let's say it goes down to 280, and then all of a sudden you buy them back. You give them your broker the shares back, and all of a sudden you collected $20 a share. That's what's going on right now when you're hearing people shorting the market. I've done it. Everybody does it. Not everybody, but a lot of people do it. It's completely fine to do. You might hate short sellers for doing it, but guess what? They also fuel the rally because eventually they get caught with their pants down and the market starts going back up and they got to buy back those shares at even higher prices than what they originally sold them at, taking massive losses, and you get this short squeeze which marks the bottoms of significant sell-offs. So that's what you want to look for. You want to look for that panic sell and then all of a sudden the huge short squeeze that causes a whole bunch of panic buying. Now let's look at some stocks here, figure out what kind of companies should we be targeting if this market continues to sell off, and what kind of prices should we be trying to hope to get in at. For Apple, same as last week, I really want to get in at around the 240 level, 241, 242. Really good buying opportunity there because it represents a retest of this long-term trend line off of the January lows. It's held it very well. If it gets down to there, I think it's a pretty good bargain. That's where I want to be buying Apple at. How about Tesla? Because everybody likes to talk about Tesla. Let's talk about Tesla, shall we? Trend line off of the October lows. It's held pretty well so far. People are looking at the 50-day moving average. Nah, I don't want that. I would much rather target Tesla at around the 570 level. I think if it gets in there, I think it becomes a better buy. If that doesn't hold up, ideally, and I know I'll get some flack, this is my pie in the sky scenario. I would like for it to get at this breakout level on Tesla, going back to, what was it, like 2017, okay? Huge breakout level. If it comes back down to like 375, huge buyer right there. There'll be a ton of people buying. I don't think it'll get there, okay? Just my personal opinion. I don't think we'll see that. I do think that 575 is a realistic goal though. Gilead has been holding up phenomenally well. Stock market's down 100 points. Gilead, it's up 5.5% today. Why is that? Because coronavirus. They're considered a coronavirus play with their medicines. I missed the boat on this one. I didn't get into it because I'd seen this chop for a long time and then it gapped above the chop. I decided I wasn't going to get into it. I didn't want to chase it. Let's take a look at Netflix, because what are people going to do if they can't go to work or if they're stuck home from school? They're going to Netflix and chill, right? So rising trend line off of the September lows. It's still in place, hasn't broken. This stock has done phenomenally well because It's kind of like Gilead. It hasn't done as good as Gilead, obviously, but it's not taking the hit that so many other stocks where they're down 15, 20% right now. Not Netflix. Netflix is still near its recent highs, and it's holding this trend line that it's trying to test off of today, and it bounced. So there's some good signs here that maybe there's a move back to 400 in the coming days. If this trend line breaks, then possibly target the 344 level on this stock in the days ahead. How about these really beaten down stocks? XOM right now is a 7.3% dividend. It's at some historic lows almost, right? Lows that we haven't seen since 2005. Incredible dividend, but you're not getting much out of the price action right now. Maybe there's going to be a future bounce in energy. I don't know. I really don't. I don't know if there's a seismic change going on in the energy sector that is beyond my understanding. It does scare me quite a bit though, XOM. Norwegian Cruise Line, look at this. It's gone from 60 down to 27, okay, in a month. Huge decline, more than 50%. At some point, yeah, it's going to get bought up. I just don't know where. However, keep your eyes out for it. Either this thing is almost about to put in an all-time low if it breaks below 24. That's insane. RCL, the same thing. This stock is just getting destroyed. It went from 140 all the way down to 64. Massive decline. Haven't seen these kind of lows since 2015. What about Facebook? Well, you got this all-time trend line here. This is a massive trend line going all the way back to 2012 when it first came out as an IPO, and it's trying to hold. It is trying to hold today. It is testing it today. If that holds and this market can recover from the coronavirus, maybe it gets back into the 200s again. Let's talk about Alphabet, Google as we all know it. Another internet company. They have a lot of streaming services like YouTube that you probably know about. Holding the trend line off of the 2015 lows, doing a good job of it so far. And guess what? It broke this 1305 level that I was talking about the other day. Broke it, sold right underneath it, still trading below it. And now we have to look at, okay, are we going to test this long-term trend line right here at around 1160? If it gets down to there, and it's not too far off, that's about another $100 off of its current share price, then it becomes a very attractive buy in my opinion. If that level breaks, there's a lot of ifs out there, guys, okay? You got to bear with me. I'm trying to give you the most opportunity, the best understanding of the stock market that I can possibly provide for you, because there's no sure thing in the stock market, so I'm trying to give you multiple scenarios here. If this 1160 breaks, then all hell could be breaking loose on this stock, and it goes down to about $1,000 a share. If you could get that, I mean, it would be a really good entry price on it, and a good possibility that you're going to make a good return on it in the long term. This market is crazy, all right? I've been doing this since I was 11 years old. I've gone through the bubble in the 2000s from the .com. I've gone through the 2008 crash. I've seen a lot. I've seen the flash crash of 2015. This is up there with some of the craziest stuff that I've ever seen. But you know what? It's going to pass too. I don't know what everybody's portfolios are going to look like after this. I don't even know what mine's going to look like after this. I'm doing fine. I've been pretty much in cash for the most part, even shorting stocks last week. I tried to buy the dip a little bit this week. Didn't quite work, but I only did it with a little bit of cash. So I'm not hurting all that bad. I'm kind of optimistic going forward in terms of being able to recoup this week's losses, which weren't very much, and really make some good money going forward here, because managing the risk is what it takes. I got stopped out of Microsoft today, but I'm managing the risk. I've kept the loss small. I still have Netflix, I still have LRCX, I still have NVS. Okay, if the market wants to bounce next week, and there's a possibility that it will. If it does, then I'll start adding to those positions, not to those exact stocks, but adding more positions to the portfolio. If the market decides to retreat again, my stop losses will be moved up along the way, and I'll get stopped out of those trades, and then I'll reorganize and look at where the market wants to go from there. But it's a day-by-day thing here. The worst thing that you can do is panic. The best thing that you can do is, if you get into a trade, before you ever even get into it, know where you're going to get out of it if you're wrong. I always expect to be wrong on my trades. You have to in the stock market. Whether you're a long-term investor, short-term investor, always know the risk. Always manage the risk. Be active managers of risk. If you do that, the profits will always take care of themselves, I promise you. Take care, guys, and I wish you guys all the best. If you have any questions, feel free to email me, ryan@shareplanner.com. I'd love to hear from you. I'd love to hear what you think. Also, leave me your thoughts in the comments section and like the video, and please be sure to subscribe. Thank you.